In the month of June, I made $132,000 just from day trading. In this video, I'm going to share the complete process on how I find the stocks I want to trade intraday, the exact strategy I use to trade the stocks, and the risk management strategy I use to make consistent profits in the market. I want to provide as much value as I can for free in this video, so by the time you're done watching this, you can copy the exact framework to see more consistency in your trading. So, how was I able to make $132,000 live in front of hundreds of students in just 1 month? Well, in this video, I'm going to break down everything so you can create your own system from scratch by following me. So the first thing we have to talk about is how to find an A+ trade setup daily. Now, for me personally, to find one quality trade setup, I look for two things. Number one is the higher time frame, and number two is market structure. Both of the things I mentioned here, I have multiple in-depth guides on exactly how to identify a proper higher time frame and proper market structure. But in this video, I'm going to give you a summary as well, just so you understand how to find an A+ setup. Before the market opens, what I like to do is go on the higher time frame, and I like to see which way we're trending. Now, this is very important because whichever way we're trending is the way I want to take the trade. So as we know, we have an uptrend, a downtrend, and sideways action. And if you guys have watched my videos before, you know I typically do not trade sideways action. I try to eliminate that out of my trading system. Therefore, I trade the bull trend and the bear trend. Now, in terms of the bull trend and bear trend, I am not someone who is an aggressive buyer. I am not buying breakouts. But what I like to do is buy the conservative buy. The conservative buy is the previous breakout level turning into a level of support. This gives you the lowest risk entry, but also it allows you to have the highest reward. So the main thing I'm looking at for a quality A+ setup on the day is which way is a higher time frame trending. For me personally, an uptrend or downtrend is what I'm going to be looking at more in specific. And of course, when we go look at a real example, this will make much more sense. But before we do that, you need to understand what I'm looking at. So it needs to be an uptrend or a downtrend on the higher time frame. And after that, I'm looking for specific patterns. Now, these patterns help me see what other buyers and sellers are seeing on the stock. So we know that after an uptrend, the stock has two options. One is sideways or consolidation, and two is to pull back. So if the stock after a big move up has a consolidation period, or after a big move down has a consolidation period, that shows that the stock is going to most likely continue in the direction it's going because it's not pulling back. In this example here, that means the buyers keep buying the stock right near the new lows. So every time we come near these lows, the buyers are buying it up, and therefore they're keeping it in a range. And as we know, the tighter the range gets, the more likelihood of a bigger or an impulse move to either side. So in this example here, this would be a bullish flag. We can see an impulsive move to the upside, consolidation, and then a breakout. Now, some of you guys may be asking, you just said that you don't trade consolidation, and that is correct. I am waiting for this consolidation to break. What I'm looking for is that the stock breaks out of this range period that we had. Now, this range could be on a 4-hour time frame, a 1-hour time frame, or a daily time frame, but we're simply waiting for the range to break out. And then after it breaks out, I'm waiting for a retest of that range. Now, the reason we're waiting for it to break out is to continue the trend in the direction it's going. And this just gives us a little bit more of a higher probability entry. The reason I do this is because this gives us room for error on the human mistakes we could potentially make. Now, I call it the triple E's: entry, exit, and emotion. The reason I call it this is because in this scenario, what happens is, and we'll see when we actually look at the strategy itself, sometimes you may be wrong. You may have entered too quickly. You may not have exited as fast as you needed to, or you may have held past your exit. Or sometimes you simply can't get into the trade because of the human emotions you're feeling, maybe fear, maybe greed. And based off those human mistakes or human emotions that we're feeling, we need to have a system that allows for error, especially if you're a new trader. You will make errors as a new trader. And therefore, when we're looking for A+ trades on the higher time frame, because the trend is going in our direction and the stock has just had a breakout, that usually means that there's going to be momentum intraday that we can trade. And therefore, we can can make human mistakes on our entry, exits, and even have some sort of emotions. As a new trader, you will have emotions. However, you can have small human mistakes and still have profitable trades, and that's why finding A+ setups on the higher time frame is crucial. Now, once you know which stock you're looking for, there's multiple different setups that I like to trade, but one of them is the pre-market high and low strategy. Number one, we need to mark out the high from 4 a.m. Eastern to 9:30 a.m. Eastern. These are pre-market levels, and there's liquidity sitting near these levels because this is where the most liquidity before the market opens was, because it couldn't break above or below. So for us, we want to mark out the high and the low of the pre-market levels. After this, we're waiting for the stock to break and hold either levels. So in this example here, we can see that that same example we had previously, we broke below that pre-market low, and as we can see, we held and then we retested with a weak price action candle. Now, it is so important that we enter on strong price action of the retest of pre-market high or low, depending on if we're bearish or bullish going into the day. And then we're looking for targets either at high of day / low of day or higher time frame key levels, which we'll look at a little bit more in the examples as well. And finally, we're going to keep our stop loss at a break of market structure. So if we can look at this example right here, we came back, we retested, we got a weak price action candle, we enter in on the weak price action candle with our stop loss at high of day because that's the break of market structure, and our profit target was a previous day low level. This gave us a 2.6 risk to reward. This means if we were risking $100 on this trade, we would have made $260. Now, in terms of risk, how do I manage my risk in the trade? When I'm looking to manage risk, on average, every trade I take is a 2R multiple. This means every $100 of risk equals a $200 reward. What this means is I can have a 50% win rate and still be profitable. It also means I have room for error, as a higher win rate will increase profits, but a lower win rate would not hurt profits by much. So in this scenario here, like I've showed you guys before in multiple videos, you don't need to have a super high win rate to be a profitable trader. That is a myth. You need to have balance between your risk to reward and your win rate. As long as you have the right balance, you can be a profitable trader. So in this specific strategy that we're going to talk about today, the win rate is a little bit over 50%. However, even with a 50% win rate and a 1 to 2R multiple, meaning we're making $200 and we're only risking $100, we would be in profit. Even based off of human errors, if we do not have a 50% win rate and we drop to a 40% win rate, we will still be in profit. And of course, if a 60-70% win rate occurs, then we would still be in more profit. So at the end of the day, with this strategy, as long as you even have a 40% win rate, this means out of 10 trades, you only have to win 4 trades. With a 2R multiple, you will still be profitable. And that's the beauty of this strategy, is that you don't need a high win rate, but when this strategy does work, you will make much more profits than you're losing trades. So with this being said, I just went over my risk management, I went over the strategy we're looking for, and I went over exactly how to find an A+ trade going into the day. But now we want to go look at a real trading example to really tie everything in. Okay, so here we are on Nvidia, and as we can see, we are on the 1 hour time frame. Now, the number one thing you want to look at on Nvidia is that we were making clear highs right here, and we continued to make those clear highs, and along with this, we were also making these lower lows as well. Now, after we've identified that the stock is in a clear uptrend, and this one was very easy because we had an impulsive move to the upside, some consolidation, and then a push up. We had a little bit of a pullback, but then we pushed right back up, and therefore we know that we are in a clear uptrend on the 1 hour time frame. Now, after we understand that, we're looking for a flag pattern or just some sort of consolidation. On Nvidia here, we can see that we have a clear flag pattern right here. So we need to break above this flag pattern, and we have a clear consolidation level right here, and this is what we need to hold. So this is the low that we need to hold for a continued push up on Nvidia. So on the higher time frame, all we're looking for is just a big push up or an impulsive move to the upside, showing that the stock is indeed in an uptrend, and then just some consolidation. Now what I would be looking for is a move or a break above this level, and then I would be waiting for pre-market high and pre-market low to finally develop, and then I would be waiting for the pre-market high break retest of pre-market high for a push up on Nvidia. So with this being said, now what we have to do is go over to the pre-market levels. And when I came over to the pre-market levels here, we can see that the stock actually did end up breaking out of our levels. So now we have a clear move to the upside, and we're also gapping up on Nvidia. Therefore, this shows that the stock is indeed in an uptrend, and we're now just looking for the most lowest risk entry. Now, for me on this trade right here, all I would do is mark out the pre-market high up here and then the pre-market low down here. And from this here, all I'm looking for is a break above pre-market high, a retest into pre-market high, and then a continued push to the upside. So let's play out this trade and see exactly what happens. All right, and right here, what we can see is we broke above the pre-market high level and now we're retesting. So when we are retesting this level, we can see that we're at that 123.52 pre-market high, and we can see that the stock is actually trying to hold above this previous level. That's what the wick is showing us. It's showing us that the sellers try to bring it below 123.52, but the buyers were able to hold it above that level. So for me, how would I enter into this trade? Well, I would be looking at a long position here, and my stop loss in this scenario is just going to be a candle close below the low of day. So this is low of day, and my stop loss will be a candle close below this level. For our profit targets here, we can scroll out and see the higher time frame levels, and we can see that Nvidia's all-time highs is actually up here at 125.60s. So if we move this all the way up to 125.60s, this gives us a 2.62 risk to reward trade on this entry. And like I've talked about before, we need an average or a minimum of a 2R multiple. So let's enter into the trade here and see exactly what happens. Right here, I do want to mention that we came near our stop loss level. However, we actually did not close the candle below that level. It simply wicked and then came back. And this shows that the buyers are still there near that low of day, and therefore we would have not stopped out of the trade. I've said this in multiple videos. I do not stop out of the trade unless the candle closes below the level. So let's keep playing out the trade. We can see here that the stock broke above high of day, and now it's currently consolidating or retesting this previous high pivot level right here. And just like that, we were able to hit that 125.60 or that all-time highs on Nvidia. And this was a $1,020 trade by simply using the pre-market high as a retest and understanding how that consolidation period on Nvidia allowed the range to get a little bit tighter. And because the range got tighter, we were able to get the impulsive move to the upside and have strong momentum on the day to actually make profits on Nvidia. And this was once again a $1,020 trade. So in this video, I broke down the framework step by step on exactly what you want to do to copy a winning trading system. Of course, at the end of the day, you need to refine the system to be your own. You need to backtest the data as well, but I hope this puts you on the right path. If this video helped you, make sure to leave it a like. If you have any questions, put in the comments down below. Make sure to follow me on Instagram and Twitter, and I will see you guys next week with a brand new video.